Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. Guys, we got two charts you're really going to want to see. One might be telling us that we need to be buying the dip today, and the other one, I'm going to tell you more about the market. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Okay, Bob, interesting chart here. Tell us about it.
Yeah, we got a little bit of a mixed bag today. So the first chart I want to show you guys is, this used to mean a lot, and I think it's going to be meaning a lot going forward, is that it's really the cash to dividend yield ratio going back since 1923. And really what it says here is that you want to be in stocks when this number is low because it pays you to be in dividend paying stocks. And then you want to be in cash or short-term treasuries as opposed to stock when this number is high. And so during the tech boom, it was 5 times better to be in cash than it would be to be in the tech stocks on a go-forward basis because you just weren't getting paid for the risk. And also because everybody was piling money into tech. And it's repeating itself again here now. I don't think it's going to quite get to where it got during 2000, but we've seen it too. You get a higher dividend yield or an earnings yield from a treasury than you do from a dividend yield for stocks. And as you know, this across the board, we've been personally shippers and energy names and pipelines give you 4%, 8%, 12% respectively. And then there's some, what do you call, ultra dividend stocks that are kind of hybrids like XOMO that pay you 15% because they're actually selling calls against it. But that's how you have to push out on these curves here to make yield. And what you're looking for here is you're looking for that to turn down. That means the market's going to probably turn down with it. But two things have to break, Phil. Either Powell has to relent or the market's going to have to relent. And I know the market's been giving us a little bit of fits and turns here, but the Bear brothers here are going to tell you that it's probably time to buy a dip. So I'm going to throw this chart over to you. Let me share this chart. This is pretty cool. And this is why we actually bought yesterday.
Yeah, so this is basically the seasonality for April. Tax day, you can see, obviously, if we're pulling back into tax day, it's pretty bullish and it supports a move basically into the end of the month, which also supports the election year seasonality, which we showed you guys a couple of videos back, where typically you're going to see a bottom in the middle of April, up to the end of April, pull back one more time, middle of May, and then finally one move out of May that's really a big move into September, essentially. And that kind of supports our view that we're still not done to the upside in this market. Come September, it'll be interesting to see where we are and what the financial conditions are like, because that's where I start to get a little nervous. We probably will see some volatility around that time. And then you're going to have one final push, usually into the election, sometime in October into that November election date. Then it gets really interesting because now there's really not a lot of incentive to prop things up at that point. The new guys in or the old guys in, whatever the case is for the next 4 years. I think things can get really dicey in Q4. But for now, tax day seems to be like the bullish catalyst for markets going into the end of the month. The other thing I wanted to show you guys was one last chart. This is the S&P 500 pulling back, as you can see over there in the upper right, pulling back into some support. But more importantly, the breadth reading below is at very bullish levels here. We pulled into that yesterday as we had a red day into tax day. So you have tax day seasonality that's bullish. You also have breadth that's reaching levels that it hasn't seen since October of last year. So this is definitely a dip that has not been the norm for the last few months. So those two things coupled, and there's some other things too that are bullish. Net liquidity is going quite a bit higher here, so that's risk on as well. So I know it doesn't look good right at the moment, but I think it's one of those things where you might wake up tomorrow with a big green candle.
Yeah, and the other thing is a truism in the market: don't short the hole, they call it. So, and when something's breaking into support, can it break support? You short, but the risk reward is not in your favor. So, if you want to short this market now, you got to let it bounce and have it fail to make a new high, and then you're in better position for a risk reward. But a lot of things are setting up here now for at least a short-term bounce. OPEX week, it's actually classic, Phil. Friday Friday was down, Monday was down, Tuesday we're getting that follow through down. At any moment today into tomorrow, you get basically the Wednesday, Thursday rally. And most OPEX weeks, it's the other way around. Friday up, Monday up, Tuesday follow through, Wednesday, Thursday flattish to down, Friday flat. So we're getting a little bit of a mixed bag. But I would say at the very end here that Thursday noon for sure, because that's typically what they do. They'll recover. But it looks like the market has stopped going down here as we're doing a podcast actually early today. So guys, a little bit of a mixed bag. Longer term, I'm still bearish, but I'm going to be taking these trades. There's a couple really good trades. If you want to trade with us, I already shared them in the room. They have high probabilities of success, and we just have to wait and see the follow through so we can monetize on those, and then just keep watching the market for selling the rips. But take it a day at a time. Thanks, Phil. You guys have a great day.
Trade Genius.